Gostaria agora de chamar ao palco Christiaan van der Valk, Strategy Regulatory Vice President da Sovos, que nos irá dar uma perspectiva geral sobre o ecossistema regulatório de conformidade fiscal a nível mundial. Welcome, Christiaan.
Thank you. Can everybody hear me okay? So good morning. I have 15 minutes to talk to you about a subject that I can talk about for hours, weeks, months, and frequently do. So I'm going to try and pack a lot of information into just a few slides here. Who here remembers the millennium bug? That, yeah. I remember I spent years in an organization talking about this, and there was this big awareness campaign that turned out to be probably mostly fake and a money-making scheme for technology companies. Even though that millennium bug probably was fake or somewhat exaggerated, I've sort of come to learn that there was another millennium bug that we don't talk too much about, which is really the awakening of tax administrations to the potential of technology. Prior to the turn of the millennium, I grew up I was trained as a lawyer and I worked a lot in tax most of my life. If people combined the words technology and innovation and tax, we'd all be laughing about that, right? It's like, haha, that's funny. Yes, tax people don't innovate. They're just boring, stuffy, dusty bookkeeping people. And in fact, I spent a good part of my career working in the UN system on the next generations of laws and conventions. And I do remember whenever we talked about e-commerce, because there was a lot of work done in the 90s around e-commerce, whenever a new sort of model law or convention would come out, all of the member states at the last minute would say, this is all fine, but it can't apply to tax. Technology, we don't like tax and technology. We want it to remain on paper. We don't trust any of it. We like our auditing procedures. And then the millennium changed, and all of a sudden, and this I actually know precisely which moment this was, there was a lady and her team in the tax administration in Chile who said, you know, maybe, just maybe, actually technology isn't our enemy. Maybe it's our friend. Maybe we can do something with technology that can help us as tax people collect the money that is due. And I met this lady I'd actually met her a few times, but I met her again at a big tax conference in Bolivia about 9 months ago or so. And it was really interesting because she was in the audience where tax administrations, I think some 30, 40 tax administrations were presenting their data strategies to each other. And I actually have one slide from that presentation. And she stood up and she said, you know, I had never imagined that the ideas that we developed at that time, you know, in 2001 in Chile, would have taken such an importance in the world of tax. And she said, I always remember, she said, it's a little bit like reverse colonization, because we were talking about what's happening in Europe. This has come from Latin America, where people have innovated tax in such a way that this has now become a tsunami of regulation, and that's kind of what I wanted to talk to you about. So what was it that these people in Chile discovered or thought of that would make things so different that we would come together in conferences like these all around the world and talk about tax digitization? The first one is that tax administrations have long struggled in the world of paper with the friction of paper and the fact that it is almost impossible to get reliable data from businesses. And that translates, as many of you know, in the European Union, somewhere between 100 and 200 billion euros that are just not collected just on VAT every year. It just disappears into this black hole of friction and the inability for tax administrations to cost-effectively audit and enforce the law. And a lot of that is because in the paper-based world, what tax has been all about is a world of tax code, so the actual fiscal code, the text of the law that needed to be interpreted, right? And interpretation means that there is a massive amount of subjectivity that enters into the picture. And then the businesses would make a declaration, which legally means I've done the best I can every end of the month or with a certain frequency to the tax administration. So that is that whole declarative world that we used to live in is a massively flawed world from a tax administration perspective, right? There's a lot of money that goes lost, and it's also just quite a terrible thing to have to try and understand the accounting systems of businesses through this very blunt instrument of periodic reports. The people in Chile said, we should change that. Business data, most of the time, is already born digital in business systems. Why do we still require people to then print that on an invoice? Why don't we just tell them, use a structured computer file for an invoice, and then, by the way, send that to your trading partner, because that can only be good for them. You cut out the paper step. Send it to your trading partner, but then also copy the government, because then we get the information. And that was the revolution. Copy the government was the big revolution. And so we've gone from a world of interpretation and declarations to a world of technical specifications and source data. Now that sounds like just terms, but it is a massive, massive change in the way that we think about tax and the enforcement of tax law. So tax administrations, on the back of this thinking, have found ways to get more data, to get more granular data that is ready for, because in a structured format, in a standardized format, is ready to be processed and analyzed. Much more reliable data, because they control both ends of a real-time transaction, and that's what the source part of this refers to, right? If you just get a snapshot of what is in somebody's business system, you get a very subjective view of just one end of a transaction at the end of a period. But if you can control both ends of the transaction and you can get the data in a structured, standardized format in real time, that completely changes the picture. This is really what the tax digitization tsunami has been all about. And if you wanted to sort of illustrate what that tsunami looks like, in the year 2000, as I said, so this millennium bug that happened in the world of tax, in the year 2000, there was still pretty much nothing. Tax was all about paper-based reporting, indirect tax particularly, but all types of tax. In 2015, so just 15 years later, this is what the world looked like in terms of the adoption of these types of methodologies, right? Moving away from declarative data, moving away from the old regime into trying to get data in time in this new, what we have often called e-invoicing or continuous transaction controls. A massive change. And then just in 2020, not that long ago, the world already looked like this. So in a very short period of time, these ideas have become the mainstream kind of thinking among tax administrations. And our expectation, and this is probably somewhat conservative because you can see North America is still gray. As you know, at least the US doesn't have value-added tax, and that changes the perception a little bit, or that changes the incentive to collect data in real time. But there are things going on. You will hear from later speakers, from Carmen and others, about what's happening in the US when it comes to electronic invoicing as well. But we firmly believe that the vast majority of countries in the world by 2030 already will have some form of continuous transaction controls, usually based on mandatory electronic invoicing. Right, so in just 30 years, which is a short period of time, the laws, the practices, and just the whole situation around the world when it comes to how businesses and governments talk to each other has been profoundly transformed, right? So now I'm going to talk a little bit about what that means. This is a slide where I'm going to ask you not to take any photos, because I'm not supposed to share this with large audiences, certainly not to distribute it, but I still wanted to show you what it looks like. This is a real screenshot from what a tax administration in Latin America sees. So an auditor will go to work in the morning, turn on their monitor, and this is what they will see. The point in the middle is the company being audited. The points around that, you can see several sort of levels into the supply chain. In real time, this auditor can see precisely what the transactions are taking place and where there might be anomalies. And you can also see, if your eyes are good, that every one of these dots here, of the supply chain that is being visualized, have a telephone number with them. If there is a red dot, the auditor will just pick up the phone and call that company to get an explanation of what is going on in real time. In real time. Now, I can keep talking here for a long time, but one thing that is really important to note here is I do not know a single business that can visualize their supply chain this way. Frankly, I don't think it exists. It exists in the office of a tax auditor in the south of Brazil, right? That is a realization act for businesses that is key to what we'll be talking about here at this conference. Tax administrations, by and large, in many countries nowadays, know a lot more about your business than you do yourself, particularly in real time. Now, since all of this is so attractive to tax administrations, of course, they've gotten very creative about how to make these requirements real for them in the world of business. And for anyone who's worked with governments and legislation before, it's of course not a surprise that in all of the ways that these requirements can be imposed on businesses, every country has taken a slightly different mix. Because yes, why not? I mean, this is the way legislation operates, right? It's always inward looking. There is a compromise process, there's a political process. It's impossible for two countries, by and large, with normal legislative processes, to have the exact same laws. And this is the result. In this area of tax digitization, there are no two countries in the world that have even remotely similar legislation, right? I know this. I have a team of 100 people, more than 100 people around the world who do nothing but monitor legislation and engage with policy people so that we can understand what goes on in the minds of all of these people, all of these processes, to make sure that we can keep our customers compliant. This is a multidimensional challenge in so many different ways. You will hear from Carmen, one of the speakers later, about VAT in the digital age. So there's an attempt in the European Union to both harmonize some of these laws, but also to introduce them in a bigger way throughout the European Union. There's no time for this now, today, but this will also affect Portugal in quite a big way. Small parenthesis. Portugal is a pioneer country in this area, right? Portugal was definitely, I think, in the world, the first adopter of the standard audit file for tax. Technology has been a big part of the policy mix in Portugal for quite a long time. But now the rest of the world is engaging in all of this, and I think it will come back and affect the Portuguese situation as well. Now, the previous speaker talked about data. We should never forget that all of this is about data, right? I see too many businesses who kind of go through the motions and who think that the requirements, that this is all about plumbing, that it is some kind of electronic data interchange, EDI, IT gig. I can just throw it over the fence to my IT people and I ask the tax people to pay attention a little bit and then it will all go well. That is not a good idea. It's not about plumbing, it's about meaning. And if you forget that, you'll make mistakes. This is a very essential point. So I just wanted to sort of illustrate, because multi-dimensional cubes are kind of fun, but animals are more fun. So if you wanted to compare the size of animals to the data messages between the business and the regulatory world, a typical payment message, standard payment message, would anticipate about 10 fields. Your typical EDI message, as standard, will be in the hundreds of fields if it's an invoice. In the regulated world, we're talking about thousands of fields. So this is a very important message. So in Brazil, for instance, for those who have experience with Brazil, the standard nota fiscal, I think, is 1,800 fields. Mandatory invoice and electronic invoice for goods in Brazil. This is no longer the EDI world or the e-invoicing world between businesses that we knew. This is a completely new, different thing. And the most important thing about this is most of the data in these invoices actually isn't for tax enforcement. You probably already know, because I think this is well known in Portugal, that the electronic data that goes to the Portuguese tax administration is shared with the central bank, right? There are hundreds of examples now of tax administrations using this digital data for other departments of government. Actually, this isn't a tax revolution, it's an e-government revolution. It's always on. Tax is often the conduit, but through that conduit, you will get more and more and more requirements for data, for sustainability, for anti-money laundering, for all kinds of other laws where government departments have finally understood that if they can just piggyback on the tax data, their life is drastically transformed too. So this isn't about tax, it's actually about the relationship between businesses and governments. So I did a very clumsy attempt to try and sort of illustrate this in sort of a reference model, like your common, like what does this really look like in terms of a good flow chart for businesses. So I would say, if you look at the old world, there's the world of ledgers in accounting systems, and that's usually what you would have used to create a periodic return for value-added tax purposes. Right? Now, in the new world, those ledgers will still be very important, but remember what I said about source data. Right? The tax administration doesn't want reports, they want a copy of your accounting system. It needs to be the source, it should not be declarative, it cannot be manipulated, right? So that information is still important, and as you know, there is the accounting SAFT in Portugal as an example of that. I talked a lot about the transactional, the continuous transaction control, so of course, the actual reporting in real time of transactions is probably the most important change and the most drastic change that we're talking about here. So that information needs to go to the government. The transactions are caught in real time. In many countries, not in Europe, because Europe doesn't like this methodology very much, in many countries, the transactions need to be approved in real time by the tax administration as well. It's called clearance or pre-authorization, right? So that, of course, adds a lot of, and don't forget, every country has a slightly different way of imposing these requirements. That information then is received by the tax administration, and the tax administration will apply increasingly sophisticated methods of data analytics, and already does, right? I mean, I showed you the picture of what a tax auditor looks at. This happens in other departments of government with this data as well. But they will apply analytics, and they will triangulate all of this data. They will triangulate the data from your accounting ledgers with the real-time, sometimes pre-approved data, and they will also get other data from third parties, from customs authorities, from your trading partners, maybe from the financial system. So there's a lot of triangulation that goes on in the tax administration system. Then what happens is that the tax administration does two things with that in general. The first one is, so in this always-on world, the first one is declarative reporting disappears, but reports don't disappear. It's just it's the direction of the arrow that disappears. You will get your VAT, but also increasingly your corporate income tax returns pre-filled by the government based on this information. Right? You're no longer providing a declaration to the tax administration. They will tell you what your liability is, which changes the relationship with the tax administration in pretty drastic ways, because that means that the burden of proof is now on you, and you have to disprove what the tax administration concluded from your source data. The other thing is, remember the telephone number that I showed you is spot audits. Right? An audit is no longer going to be something that happens in a month from now, a quarter from now, 2 years from now. It happens right away. It happens when the red dot pops up of a transaction flowing through that the tax administration thinks doesn't add up for some reason. Okay. As I mentioned, in the back of this, so the tax administration increasingly in many countries becomes a conduit, and the tax legislation becomes a vehicle for other departments of government to get data. And I think this is what the real revolution is, right? The millennium bug that was, bit the tax administrations is now leading to this domino effect of everybody going, yeah, actually, invoices are pretty boring documents in and of themselves, but they're the debits and credits of the businesses that make the economy. So if I have invoice data, I can, as a minister of economy, minister of finance, like pretty much every function of government can use real-time invoice data to track and impact the economy in real time, which is a massive game changer. And I think we've only just seen the beginning of this. Now, if you think about it from a business perspective, what most businesses have done is to have this plumbing mentality. I have subsidiaries, I'm talking about multinational businesses here, of course, but I have subsidiaries in 20 countries. And so far, I've sort of considered that most of these digitization requirements, these e-invoicing requirements, I kind of considered them to be something that happens in emerging economies, in developing countries, because, oh, nobody gets the tax right, etc. This is why these countries do this. For way too long, have companies been pushing the resolution of these requirements to their local subsidiaries, where every country has a different system. You will find this, it's a very common situation, probably also among yourselves here. So large companies have kind of been pushing this away, and they have all these point systems that ultimately deal with their critical business data in all of these different countries. Now, the result of that, remember, the visibility that the tax administration is already so much higher than what you have yourself. But the result of this fragmentation, the result of this sort of response of just pushing it to point solutions, is that you lose your visibility altogether of the data stream to the tax administration, right? So this adoption of point systems, it's never a good idea. In the world of IT, there will always be a moment where people try to move towards more of a platform or a single solution in moments like these. But actually, that's not the biggest problem. The biggest problem is that if you adopt point solutions in different countries to deal with different requirements, you lose all chances of having proper visibility of your data, so that you fall even further behind the tax administration. That is the real big problem of what's happening today. The tax administration is getting further and further ahead in terms of their understanding of the data that they get from you, from all your different systems, and companies are falling further and further behind in terms of trying to understand that, which means that if you get that phone call, you can't answer it. If you get that pre-filled VAT return or corporate income tax return, you have no defense. All you can do is accept it, right? You do not have a direct answer if you don't have that level of visibility. So what we see is a massive demand in the market, a massive requirement from pretty much any business we talk to for there to be a single platform that can do the connectivity with the government for all of these different requirements in all of these different countries, can bundle that data, aggregate that data, and make sure that there is one point where you have the same visibility as the tax administration, right? That's kind of what's happening in the market right now. I'm not making this up. Every single request for a proposal we receive nowadays from larger companies are about this. Can somebody please solve this equation for me? Because we're really worried about this lack of visibility, this fragmentation, this position that we've put ourselves into. We want somebody to solve it for us. That's the mission. I wasn't going to talk about Sovos, but I'll just finish with that. That's the mission we have given ourselves, to be that one platform that can help people make sure that you deal with all of these ever-changing requirements, but also that you keep one place where you can see your data and you can still be in a position where you can have a discussion on the basis of data with the tax administration. Thank you.
Thank you very much, Christiaan.